Can Uber make a comeback? This is the Uber stock analysis. StockerFinance. I'm your host, David Short. Make sure to check out my Twitter as well as my Patreon. Now, Uber stock has made a serious comeback here, rising around 73% this past year, fully recovering from the coronavirus lows. There are 52-week low of $13.71, 52-week high of $49.62. So it's trading just below right now. It's 52-week high. A market cap of just below $100 billion at 81 billion. 0.84. No PE ratio. The company is still not profitable, and although it's starting to make some serious changes to the company, which is why I'm making this video, and I think they have more changes that I'm going to recommend for this company that I think they should make in the future going forward. They're starting to make some good changes. They're adapting. They're doing a lot more than what Lyft's been doing. Lyft, Uber's competitor, has pretty much done no changes to the company, strictly doing driving, while Uber's been going in tons of different segments, trying to make new revenue streams, and I really like that. Now, one reason the stock has risen so much this year is because Uber had a big political controversy going on in California. And basically, they're trying to classify Uber employees as employees instead of independent contractors, which would significantly hurt Uber's entire business model. They'd have to pay a bunch of new employee taxes, employee fees, etc., new insurance. They'd have a lot more costs, and it really wouldn't be possible for this company to operate at all. It would basically shut down. And that's essentially what they did. They actually threatened, Uber and Lyft both threatened to shut down in California. But it looks like Proposition 22, which classifies app-based drivers as independent contractors instead of employees. The vote might be over by now. I'm not quite sure, though. It looks like it's going to pass. They're winning by a significant margin. This is a huge win for Uber as well as other ride-sharing services. And if we see that in the past 5 years, Uber's only risen about 11%. So the stock has remained fairly flat over this time, pretty volatile. And I was actually really bearish on this company. And I'm not exactly super bullish on it yet at all, although my sentiment has changed a little bit. We're still seeing negative net income. We're still seeing, a pretty drastic shrink in monthly active platform consumers from the current situation we're in. Operating expenses have not lowered very significantly, despite, they're not doing as much business right now. Revenue segments have continued to recover a little bit, but not do phenomenally well as well. Net income, though, is trending in a positive direction towards, break even, which is good. Monthly active platform users have recovered slightly and pretty significantly, actually, in the most recent quarter, Q3 2020, which is great news as well. Margins are starting to recover and head towards break even as well for the profit and operating margin. And cash flow is sort of trending towards a positive cash flow there, which is a decent thing to see. Now, one thing I really want to talk about in this video is operating expenses. Uber has a major spending problem. They could be a profitable company if they actually cut a lot of their spending. I mean, in Q1 of 2020, they spent $645 million on research and development. In Q2 2020, they spent $584 million. And in Q3 2020, they spent $493 million on research and development. Now, I don't know about you, but I don't see spaceships flying around, shuttles carrying people around everywhere. Because with that amount of money, that's what I expect to see from this company. So their research and development spending is insane, and I'm really not seeing anything come out of it. And I also think they're researching and developing in the wrong segments. Self-driving cars, they're dealing with competitors that are way far ahead of Uber. Tesla is they're releasing the entire full self-driving beta very soon. I think it's already being rolled out. They're going to have full self-driving and pretty much all their vehicles, in the near future. Google has also been, investing pretty heavily as well, and they've got a huge data center. There is a lot of competition going on, even from other foreign companies as well, that Uber's having to compete with, and I just don't think it's worth it for them to compete in that space. And you may be really confused, but I think Uber has really good opportunities in other spaces besides the ride-sharing market, and I think it can continue to be a really good company if it changes where it's spending its money. And it does some cost cutting as well in the near future. So do they really need to spend this much? Well, I don't think so. So let's look at their non-discretionary spending here. Now, general administrative, $711 million. That's an insane amount of general administrative costs, but it is what it is. They have a big staff, etc. They're paying their employees very well. Maybe they're leasing some buildings, a bunch of different space, whatever it might be. Operations and support costs, $365 million, and depreciation and amortization, $138 million. So $1.2 billion in Q3 non-discretionary spending for Uber there. Now let's look at discretionary spending, which is basically spending that they don't necessarily need to survive. So this is like research and development, $493 million in Q3 2020, with sales and marketing of $924 million in Q3 2020. So $1.3 billion in Q3 2020 alone in discretionary spending, an insane amount of spending. And I don't know about you, but I'm going to go ahead and talk about cutting costs here, because I think they could cut costs on R&D and sales and marketing. I think the spend for sales and marketing is way too high in my opinion. I think they could spend less and focus more on quality marketing rather than just quantity and just chucking stuff in their face like promotions, etc. So I've yet to see an Uber commercial frequently. I've rarely ever seen an Uber ad or billboard somewhere. Promotions are great. I see Uber promotions all the time, but if they happen all the time, they become not special. People are willing to pay more for a quality service. If I'm going to pay for food to get delivered to me, I'm paying extra for that. I know I'm going to. So for Uber Eats, if they've lost a ton of money on it or dumping tons of cash into that, it's just a money machine right now that's just completely eating up their money. They need to stop running all these promotions that are causing them to lose a lot of their money. They need to cut costs on sales and marketing. People will still use the app. Everyone knows basically, I think most people know what Uber is. So it's not necessarily the name recognition that they need, but they need to focus on quality marketing, in my opinion. Now, research and development spending is okay. It's great to do. And in fact, they need to spend on research and development. But I think it could be cut drastically. I mean, spending $500 million a quarter on research and development when I'm seeing very little progress, unless they have some crazy robot that they're working on behind the scenes, or unless they randomly come out with a complete full self-driving car all of a sudden, which I highly doubt that's going to happen. They're spending money on a losing battle with self-driving. Tesla, Google, etc. These other companies are way far ahead of them. They should focus on increasing efficiency of their company, as well as create new and actually profitable revenue streams, which they've actually started to do. And that's why I'm making this video, because they've implemented a bunch of different revenue streams. They have Uber Eats, they have the ride sharing service, but now they have Uber Freight, Uber Business, and they have Elevate as well, Bike and Scoot, Transit, etc. So all these different revenue streams that could potentially come simply from the same app. So they don't need to make a drastic amount of changes, but they're providing a bunch of new services that I think businesses will find to be really helpful for them. So they're kind of focusing less on the individual and going more business to business, which I think is really great. And I think it's the direction that Uber needs to head in. Now, I put some rectangles around what I think Uber should keep focusing on. So Uber Eats, that's great. Uber ride sharing, they need to keep doing that as well. Their business would collapse without either of those. Uber Freight, I think they should definitely keep focusing on that. I think that's going to be a huge part going into the future. The trucking industry and the freight industry is a nearly $1 trillion industry in the US alone. So it's a huge chunk of the pie that even if Uber just gets a little bit of it, could add a significant amount of value to the company. Uber Business as well, I think there's a lot of value there, and I actually think it's kind of a niche segment that Uber could definitely benefit from. And because you're focusing on businesses instead of individuals, you could charge a lot more for the rides, you could do a lot more for scheduling. They're willing to pay more for a quality service that could actually be significantly more profitable than what their current ride sharing services are. Now, Uber Elevate, I put an X over that. I like the idea, I love the concept, but I think they could definitely go about it in a different way. It's a very ambitious idea. Perhaps they could keep working on it, but if it's going to be, and I'm not sure the exact amount of money they were spending on that certain research and development project, but if it's an insane amount, then I don't know. It's kind of confusing. It seems really cool to me, but I just feel like, is it really going to make them a ton of cash? Is it really going to be a profitable business segment for them? I don't see it being that in the near future, at least. Maybe in the far future. To me, it would make more sense for them to just, get third-party helicopter drivers and then connect someone to the helicopter pilot and then charge a fee for making that connection, kind of like a broker. So their act is kind of like a marketing device for these helicopter riders and the ones who want to ride it, which is a very niche segment, but Uber could at least make a little bit of money from doing that. Elevate, I don't know, it just seems like a huge, they're kind of like dumping cash into that segment. You could disagree with me though. That might be a bit of a hot take. Same with self-driving. I've already touched on that. I think they need to cut that out of their spending. They've spent nearly $1 billion in the past year on self-driving, and I'm seeing very little progress. And the competition, they're going way ahead of them. So they have $1 billion now from break even, just about. So net income was around negative $1 billion. So let's say they cut their sales and marketing in half. That's $462 million in savings. Then they cut their R&D in half. That's $246 million in savings. Now, general administrative, there's no way they could cut it in half. This is completely unrealistic. But if they were to cut their sales and marketing and R&D in half, they would see a decrease in, or a significant cut in general administrative costs as well, since they wouldn't need as many people for research and development or sales and marketing. So I cut that in half, but I don't think that's very realistic. I think it would be more like, maybe they'd see a 10% cut in general administrative or something like that. But without the general administrative cuts, so just the sales and marketing and R&D, they'd save us $708 million just in Q3 2020 alone. With the general administrative cuts, they'd save over $1 billion, actually $1 billion and 63 million in savings. However, I don't think that's very realistic. Again, as I said, I think it'd be more like a 10 to 15% cut in general administrative costs. But still, they'd nearly be a profitable company. In fact, they might be a profitable company with those cuts. And I think these aren't the most unrealistic cuts in the world. Anyways, thanks for watching. Let me know what you think about these cost-cutting ideas, how Uber and the direction the company is going. I'm definitely changed my sentiment a little bit from super bearish to be a more neutral sentiment on Uber. I think they're adapting significantly. They've come out with some really interesting new ways to make revenue, especially since the ride-sharing program is struggling significantly right now. As we've seen, the number of users on the app have decreased significantly during these times. But anyways, thanks for watching. Let me know in the comment below what you think. Please subscribe. Check out these videos as well as follow me on Twitter at StockerFinance. And if you want to support the channel, patreon.com/StockerFinance. I post some really cool things over there, so definitely give that a look. And peace out.